Very good afternoon, everyone. Welcome to today's uLaw webinar. Today's webinar on the subject of trust and general reconciliation demystified has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. So I repeat that today's webinar is accredited for 1 hour of professionalism credits. The title of the webinar is Trust and General Reconciliation Demystified. So you could use that title to enter it into your appropriate Law Society web portals so that you can get the 1 hour of CPD credits. I do kindly request you to mute your phone lines and please use the chat window provided to ask any questions that you may have at any time during the session with regards to today's topic and webinar. Like every other uLaw webinar, today's webinar has a very specific agenda. We're going to be specifically focusing on the trust and general reconciliation process. So how do you actually accomplish it? Why do you need to do it? We're then going to look at what does it mean to be audit ready, and can a legal office, or rather, how can a legal office be audit ready from day one by making little tweaks and pivots to the business processes that they follow today so that they're always comfortable and compliant with the Law Society's guidelines. Then we talk about, of course, a quick checklist. We'll walk through a quick checklist, something that you can keep in mind within your firm and your office as you go through every week, every month, generating all of the Law Society's compliance documents, starting, of course, with the trust and general reconciliation documents. And last but not the least, after reviewing some of the core aspects of what an audit-ready management process looks like, time permitting, we'll take uLaw, which is a legal accounting system, as an example to be able to walk you through what that reconciliation process looks like, the key aspects of each of those documents and how it is generated, and how can it make it easier for your firm to be able to generate these documents on a timely manner. Okay? Once again, for those who did join us, please do review our chat window for the title and the CPD credentials of today's webinar, titled Trust and General Reconciliation Demystified. So before getting into, of course, the aspects of reconciliation, we want to draw your attention to quickly review some of the core aspects of legal accounting to begin with. And we'll start really with some fundamentals of how this evolved over time, how the whole bookkeeping process, how the accounting aspects of it has evolved over time and where we are today, so that you get a perspective of course, what's expected with the evolution of the ecosystem, the technology, the requirements, and so on and so forth from the Law Society, right? So it started off, of course, as a manual double entry system. It's a very simple process, very inexpensive, but of course, the flip side of that particular process is that it's a very time-consuming, especially when there are a number of transactions involved, and more importantly, it does not post subledgers, which is very important when it comes to trust reconciliations, so that you really know which specific client and matter are you dealing with, right? Evolving later to a one-write system and to the more commonly accepted manual entry system around the spreadsheet, of course, with some formulas using different tools like Microsoft Excel, you are able to accomplish a certain level of automation with regards to spreadsheet software such as Microsoft Excel and others. Once again, inexpensive, and of course with these formulas allows you to do some automated calculations. But nevertheless, to create those formulas, to be able to constantly update those formulas, and to avoid any manual errors takes time and effort. And of course, there is a certain component of training that's required if you are required to write those formulas and changing and evolving them as the guidelines change. And then the more popular system, if you were to upgrade yourself from an Excel sheet, is that of a general accounting software, which has evolved, of course, to provide you with the features and functionalities of posting subledgers, being able to generate documents and reports as you need it, and of course perform calculations where you don't have to manage the calculations yourself. But it still requires training, and more importantly, from a legal firm's perspective, the aspect of reports when it comes to trust reconciliation and trust documents can be a bit of a challenge. And then has evolved software purpose-built and specifically written for a legal office's requirements, which appreciates, understands, and enough of R&D has been done, of course, to build the appropriate checks and balances to enable you to be compliant from day one, generating documents that are compliant in nature, where the formatting of the expectations across various different silos of the provincial requirements are met. And with today's technology, of course, making that system available to you at any time using the advent of the cloud technology, making it more cost effective, is where we're at today. So that's really the evolution, and those are the options you as a legal firm have to be able to accomplish these compliance documents that you're bound to provide, generate and provide at the time of an audit. Now, in previous webinars, we've covered, of course, some of the important financial documents that are required as part of an audit. We had conducted a few sessions a couple of months earlier, and you could certainly search that up as in our YouTube channel with youtube.com/uLawpractice. But essentially the point in terms of the financial documentation that's required on a periodic time period. So for example, on a monthly basis, that is the expected timeline at a minimum for you to be able to generate all of the accounting financial documents for your firm, such as starting with the reconciliation, which we're going to get into a deeper dive later today. But once you've reconciled your accounts, if your firm has both the vehicle of a trust account and the general account, of course you generate both these reconciliations. If you do not deal with trust, then you do not have to worry. You're just basically dealing with just the general account. And once you've generated these reconciliation documents, then the numbers are of course locked, and you have a clear idea of all the remaining numbers in terms of your business performance, as well as the ledgers and journals. So that's when you have the opportunity now to generate the client ledger and journal documents, which are key components of that overall package of compliance documents that you generate. Then, of course, there are jurisdictional documents such as the Form 9A, etc., that are important as well. Okay? So in today's webinar, we're going to certainly talk about what are the steps involved in reconciling, what should you be aware of when you're looking at reconciling your accounts, and we'll start with the trust account, and then we'll move on to the general account. And of course, it's applicable to you based on your situation and based on whether you have both trust and general or just the general account. Okay? So as you can see, there are important components or data sets, as we call them, because the data that you represent in these reports, essentially the reconciliation document is just a report that's giving key data sets. And what the auditor is looking to review, in fact, something that you can review on a timely manner if you know what you're looking for, is the sanity and the ability to reconcile, as the word stands, between the transactions that have been recorded in your bookkeeping system, whether that's a manual system or whether that's a software-based system. So the details of the transactions that have been recorded by yourself or by your firm in your bookkeeping system compared to the transactions that have automatically dealt with in your financial institution. Okay? So for example, if you have received a retainer in trust and you've got the check, you've entered into your bookkeeping system that, yes, I've got this check from my client, check number 1234, and right away you have the process to enter it into your bookkeeping system, and it's a Friday afternoon. Okay? And of course, you then take it to the bank and deposit it into the bank. When you do deposit based on the timeline, based on when you deposit it, if there's a holiday, or even if you consider the example where you do not deposit it, there is a chance that that particular check gets reflected in your financial institution's record keeping on a subsequent time. So let's say you got the check today on the 15th, and you deposited it in the bank, and it only reflected on the 20th. Okay? So the reconciliation process fundamentally begins with ensuring the transaction exists between these two systems, and of course, appreciating the timeline with which, or if there is any discrepancy in the timeline between these two systems. Okay, so that's number one. The number two use case is where you got the check, you entered it into the bookkeeping system, but for whatever reason, you forgot. You took that check and you put it in your wallet or your pocket, and you totally forgot about it, and you haven't deposited into the trust account at all. And you suddenly realize on the first week of December that, oh my God, when you did the reconciliation process, that is when you're going to notice that what's in your bookkeeping system has an extra transaction for that check, whereas when you compare it with your bank's records, you don't even see it there. So that's when it's going to strike you, oh my God, I did not deposit that check. So these are some of the examples of discrepancies between what you write down for your own record keeping and what actually happens in a financial institution. The converse of that is possible too. You may have received a payment into your financial system. Maybe you would say debit card transaction, credit card transaction, or maybe you did deposit the check, but you failed to enter it into your bookkeeping system, right? So then what happens is when you do the reconciliation process, you would see the opposite reaction here. You would actually see an extra transaction when you look at your financial statement for that month, whereas in your bookkeeping system, you would have one record lesser because you haven't entered it. And that's where you're going to be like, oh my God, I have to enter this. And that's when you backdate it and then go back to reconciling. So the audit purpose, or the ability for you to reconcile on a time period basis, is really to help you manage those discrepancies better, and for you to have complete awareness of what those discrepancies are, and also be able to provide a reasoning for that discrepancy, so that you're aware and you know what the reason is, and you can document it as part of that reconciliation process. And there are many such examples. As much as you may assume that it's a simpler process, life gets in the way, and life throws many different permutations and combinations for where and how those discrepancies may occur. Okay? But having said that, this is the fundamental of the reconciliation. Comparing the bookkeeping, record keeping, or the list of entries, with the list of entries in your financial institution's statement. But when it comes to trust, the Law Society's compliance doctrine, which you're looking at the screen right now, consists of 4 major parts or data sets. The first is the recording of the bank statement and balances. So if you really look at the line item here, it talks as what is the balance in your bank? So really looking at your financial institution here at the end of October 31st or November 31st. What is the balance in your trust account? Okay, so the balance is really the total of available funds in the trust money, both after having deposited and retrieved money out of the trust account. Okay. The next data set is really capturing when you reconciled, do you recognize or are you aware of any outstanding checks and deposits that may be that discrepancy? So if we look at those two examples I spoke about where you failed to deposit or you did deposit but it hasn't reflected in the bank, here are two examples of, are you aware if there are any outstanding checks or deposits between the bookkeeping system and the bank, so that you know and you clearly outline those as the reasons for any discrepancy if there may be at the end of that month. Okay? I essentially hope this is making sense. We want to try and make this as meaningful and as clear as possible, because the minute you understand the concept of what's really expected of the reconciliation process, it really does help demystify the fear factor, all of the things that surround this very important business process for a legal firm. Okay? Then please do use the chat window at any time if you have any questions with regards to what we're talking about. Now, the third data set is recording the client's trust listing. And what does that mean? Over a period of time, different clients have provided retainers to your firm, right? Through trust checks, through different modes of payment. Based on the nature of where the particular matter is, it's a possibility that you may have not used all of the trust funds for each of these individual matters and clients. So the trust listing is really a line-by-line item outlining each and every client who has deposited money into your trust account, as of course that would be that of a retainer, or it could be that of a real estate transaction or any other transaction. But in this particular data set, they're looking for the client trust listing, and that's why it's very clearly outlined as the client's trust listing. So if you look at the step 3 or the data set 3, it talks about the name of the individual. Even important is to actually capture the matter or file number, the last activity date. So when was the last time the trust money was either withdrawn or deposited by this particular client for this particular matter, and when did that happen, right? And the last column that you see here is the amount, and the amount is as on this particular date. So of course, this is a quick snapshot of an example provided to you under the Law Society's Bookkeeping Guidelines book. And of course, it's dated, but the concept remains to be the same. As of August 31st, 2010, there is $1,200 or $1,120 left in the Peter Piper file, and the last activity date was August 31st. Okay? Likewise, you have that for each of the clients that are provided. And the total of that amount is the total trust liability. That's the total amount that you actually have in your hand, and you have the liability to actually do the right thing of invoicing, putting the effort, invoicing the client, and then moving that from trust to general. But until that's happened on a monthly basis, you do have to keep telling yourself, your firm, and as a summary, of course, to the auditors when they do audit as to what's happened. That's the audit trail that they're looking for. Okay? And the fourth most important data set is having gone through and being aware and conscious of all these discrepancies. In some cases, you may just have a smooth reconciliation where what you see in your bookkeeping system is exactly what's there in your bank, and it's a one-to-one match, and it's perfect. It's a wonderful world, a very happy reconciliation process. But at the end of the day, the last data set is the ability for you to showcase the total reconciled bank balance for your trust account or your financial institution, and the total unexpended balances as per the client's trust ledger. So this total amount of unexpended balances in your client's trust should match the total reconciled bank balance on this particular date. Okay? And if they don't match, then of course you explain as to why they don't match. Maybe there's an outstanding check or outstanding deposit, and that's why you have step 2, to really outline why there is a discrepancy, if there is. So in the case of a trust reconciliation, keep in mind that there are 4 important data sets. So whether you're using a system to generate this for you, or whether you're using a manual process, handwritten journals and ledgers, whichever process you choose to based on your comfort, the compliance nature dictates the need for these 4 data sets. Okay? And the same concept applies to the general reconciliation. Okay? Of course, when it comes to general reconciliation, you have to keep in mind that there are other possible transactions that touch the general account. There are disbursements that you may be doing out of the general account. You may be doing trust transfers from trust to general. There may be instances where you're just getting paid directly into the general account. So those are the variety of opportunities where money is coming into this general account and leaving the general account. And other opportunities could exist too in terms of office expenses, etc. So when it comes to general reconciliation, it's always a handy idea to label these transactions, whether they're client-based, client-based disbursements, for example, or if this is regards to an office expense, which is really an expense for your firm. Okay? Now, the one difference that I'm sure you're already seeing is that the general reconciliation, of course, does not have the client's trust listing on it. It certainly still captures the recording of the bank statement and its balance on that particular date. The same example, or this is a more recent example of July 2017. It, of course, looks at the closing balance in your bank statement, and we're looking at a TD statement here. Any outstanding deposits and receipts. So you can see there's about $167 outstanding withdrawal here. And there's an outstanding deposit of $2,261. So when you add all these 3 line items up, that's where you get the $11,883 as the total account balance. Furthermore, of course, it lists out, so if you're looking at $167 of outstanding withdrawals or payments, what are those transactions? So here's, on the 26th of June, you had a land title search fee of $67, which is an outstanding withdrawal. So you haven't taken that. That hasn't been taken out. So maybe you've already written the check, right, for the search fee for this particular client, and maybe you send it to the ministry responsible for that, collecting that fees. Maybe, unfortunately, within that time period, they have not encashed that check. So it has not reflected in your bank as a withdrawal. Okay? So let us assume that this is only going to be withdrawn later in December. When you reconcile for November, your bank is going to have $67 more than what your bookkeeping system has, because you've already recorded for the check payment to have left, but in reality it hasn't happened. So that's the check between what's in your bookkeeping, and let's assume the financial institution is really the reality check of it. That's what we're trying to accomplish through the reconciliation. And of course, the third data set is looking at the bank and ledger comparison. Very similar to the trust comparison, where the outstanding balances between the bank and the ledgers in your bookkeeping system need to match. So the general reconciliation in terms of the overall concept remains to be the same, with the only difference that they do not need your trust client listing in this, of course. Makes sense. So Then the next really question is, okay, all this is fine and dandy. Now, what do we do? How do we get this done? If we were to summarize this, and that's what we're trying to do, is really give you information in bits and bytes so that it's easily consumable, and it's part of, the learning process is that much more coherent. So if you really look at it, we've broken it down into 3 steps. So 3 important pieces of information for you to generate a reconciliation document starts with the date of reconciliation. Okay? The Law Society, of course, recommends that you generate a reconciliation report, what they call a monthly reconciliation report. So definitely 1 document a month at minimum. Typically, legal offices do it at the end of the month. Sometimes they're proactive to do it a week in advance before the end of the month. And the reason they do that is, again, to be smart about any discrepancies with regards to any fees that have been wrongly withdrawn from the wrong account, any O-rate charges, interest that you may have gained, to be able to deal with those subtle financial transactions that may occur, the anomalies that you may have to deal with, right? So it gives you a buffer to react. So even if you do it on the 26th, and if you have to go to the bank and make certain adjustments done, you can still come back and generate the monthly reconciliation report before the 30th or 31st. Okay, so the number 1 is the date of reconciliation. The second piece of information that, of course, you need to keep in mind and have is log into, and again, today's banking world allows you, depending on who you're banking with, of course, gives you the option to be able to do this online, where you're able to log in on the web, whether that's TD, CIBC, RBC, other financial institutions, including credit unions that give you that capability today, to be able to go online and review the balance in the bank statement for that particular date that you're looking to reconcile. So if the date of reconciliation is the 15th of November, then you're looking at the balance of that particular bank account as of the 15th of November. Okay? And for those who don't have the online system, that's fair, you would actually get these reports and documents in mail as a printout. So you would keep that handy, and you would look at the balance as of that particular date. Okay? And that's what you would enter into the balance per bank statement. This is to compare that balance with now the total calculated balance in your bookkeeping system. Okay? And the third, of course, most important piece of information that you need to deal with are the transactions themselves. So, up till that date of reconciliation, we're looking at all the transactions that you have recorded, and you're comparing it between your bookkeeping system and the record keeping in there, comparing that with all the line items that are recorded in your financial institution. And all you have to do is ensure that the line item, or the transaction rather, exists between these two systems. Again, as I said, in the ideal situation, of course, it's going to match. What you see here is what you're going to see in the bank. But if for whatever reason these transactions don't match, that's where you need to understand where the mismatch is and either make those necessary adjustments or record them as an outstanding deposit or in withdrawal as the reason for that anomaly. And once you've actually done that, you're going to notice that your balance in your bank and the balance in your ledgers match. And once they match, they know the numbers add up. Once the numbers add up, you're ready to generate the reconciliation report that gives you those 4 data points when it comes to trust and the 3 data points when it comes to general. Of course, if you're using a manual system, you would have to keep a tab of the client's trust listing. And that may be the only one other added, I wouldn't say challenge really, but one additional responsibility that you have if you are doing this today in a manual way is ensuring that you have a good tab over the client's trust listing, because that is an important number, especially when it comes to decimals and things of that nature, that you really have to keep a close eye on, because all of that adds up. And sometimes you can be off that reconciliation in decimals and it's frustrating, but that's where if you do this more closer to the weekly basis rather than wait for the end of the month, the faster and easier it is to be able to deal with that situation. Okay? And we quite often in our webinars talk about it, is being able to really be close to every transaction, whether that's capturing the data to enter it into the system or reconciling it so that you can remind yourself faster of why and how that transaction occurred. Okay? So then let's review the benefit of the reconciliation process. Why do this at all? Of course, the Law Society does require you to do this, but beyond that, what are the examples of the benefits of a reconciliation process? First and foremost, again, it's a fallback system that really allows you to be aware of specific issues that may arise when it comes to managing these accounts. One, it of course allows you to be aware or on top of all the transactions that you've entered into your system, your accounting system, and be aware of the mismatch, if there are any, the anomalies between your accounting system and the bank. Okay? And we've spoken of a few examples, and there could be plus or minus on both sides, but reconciling your account, the faster and the sooner you do it, the easier it is for you to recollect the memory, for you to internalize why there is that mismatch. Did I really deposit that check or did I not? So if your memory serves well, of course, you can take the time that you need, but like anything else, with so many different things that you have to deal with as a legal firm, the faster that you're closer to those transactions, the faster you're able to react to any mismatches that there may be. Okay? And also keep in mind that if the trust listing and if the date of those trust listings is beyond 6 months, 1 year, sometimes legal firms have that trust listing going on for a few years, those are certain areas that you need to be aware of, and you need to keep a tab on those, because auditors may sometimes come in, ask you to showcase your trust reconciliation report. Everything may be matching really well, but let's say the last activity date on a particular trust account was 2009. Just throwing it out there, right? They're going to definitely frown upon it and basically ask you to take some corrective measure of either returning that trust money or actually finding a way to be able to reconcile or deal with that amount. Either do the work, get paid, or return that funds because something's not right, things are not moving forward, or maybe you have a very valid reason. That can happen too. Okay, so the auditors are basically looking for the dates on that trust reconciliation report too. So 2 issues to capture if there is mismatches on your accounting side and if there are mismatches on the bank side. So what's a good example of the bank side? And we hear this quite often, especially when you're dealing with trust accounts. And if you're a new firm who's just started, often what we've heard from the experiences is when these banks open these trust accounts, and of course the financial institutions are getting better and better by the day, but it may so happen that they may actually charge a banking fee and withdraw that banking fee right out of your trust account. So let's say you have a banking fee of $6 a month. technically speaking, that $6 needs to come out of your general account or your operating account for your firm. The trust account is something that needs to be maintained with high level of sanity, that have transactions that can relate to a client. Say their money coming in on behalf of a client or money leaving for the purpose of a specific work done for a client, right? Even if it's for real estate transactions, etc., it's for a client. There can be just random numbers being withdrawn from the trust account that don't have a client backing it. So if $6 for banking fee comes out of your trust account, then of course you have two options. If you capture that error and you notice that you do the reconciliation today and you realize that the bank just charged you $6 on the 14th of November and it shouldn't have happened, then you still have 2 weeks left to reconcile for the month of November. So you can run to the bank, you can talk them through this and say, you know what, please ensure that you deposit that $6 back into my trust account, right, and withdraw that $6 bank fee from my general account. If that is the case, the bank would do that, then the numbers match. You don't even have to sometimes report the plus and minus of that $6. But if you're reconciling this on the 30th, or let's say the 30th of November, and you've not noticed the $6 bank charge on your trust account, now if you're going on 2 Fridays later to the bank and you're reconciling on the 30th, and then you go run to the bank and they're like, I'm sorry, buddy, we can't help you by end of this month, but we'll make sure that this reflects on the 4th or 5th of December. Then what's happened is that anomaly, that $6 being withdrawn from your trust account when you reconcile the month of November will exist. That issue of $6 being lesser in your bank compared to your bookkeeping system will exist, and that's where you have to report that as the reason why there is $6 lesser when you reconcile for that month of November. I hope that I made that clear. If for whatever reason it was not clear, please do text or send us a message, and we'll be happy to reiterate that in today's webinar. Beyond these two issues that you have a system to fall back on and really catch them early, there's some other advantages to reconciliation process that we wanted to highlight. If you've done your reconciliation process, what's the benefit of that to your business? First and foremost, of course, your accounting system would be up to date. When I say up to date, it's really all the trust ledgers, journals, all the piece of financial information that goes into your revenue, your expenses, which dictates your profit or loss for a given month. So your accounting system is, of course, up to date, including trust listing. Second, you would pretty much have a game plan to be audit ready right from day one. So it's no more last minute hurries and scurries and having to pay hundreds and thousands of dollars to get you on track over 2 years worth of work being done in 3 days, right? When you have a system in place and it's ready, up to date, and it's ready for audit, you're automatically ready for filing the taxes with CRA, because CRA, revenue agency, is of course looking for two components. Of course, there's the business tax, but then there's the provincial taxes that you pay as a business, whether that's HST, GST, PST. So if you reconcile your books, especially general reconciliation done, you pretty much know how much of money you've accepted and paid for, thereby giving you what that HST, GST, PST should look like so that you can make those timely installment payments, whether that's monthly, quarterly, however you're set up for. For your own entrepreneurial intake, you have reports and data analytics that give you the hygiene of your business. It tells you that, yes, you are 100% sure that you're profitable by this much amount in the month of November. Or it tells you, here's your revenue, here's your expense, because it has been reconciled, all the numbers have matched, and having matched all the numbers, here's the reality of the November details. all of this almost has a cascading effect on the peace of mind that it gives you, which is priceless, right? Many times business owners on a day-to-day basis, they run these transactions. They have good ways of being able to capture the data in time, but they do need to take that extra effort to reconcile these transactions so that they know how much they owe the government, how much of money they really made, and really be ready to face reality. One way or the other. I mean, it has to be dealt with. Especially when you're getting started, when the numbers are low, if the numbers are low rather. Of course, there's this human thought process that if I don't see it, then maybe I'm already making a lot of money, but it doesn't happen that way, unfortunately. So it's very important, especially in those early days, to build a discipline, but also have a bit of a comfort towards these numbers and dealing with these numbers. So the reconciliation process really helps build that discipline in you to always, I would say, go forward with being on top of these financial transactions and numbers. Okay? So having done the reconciliation process, does that, what is the entitlement of that? The entitlement of that is that you are audit ready, because the subsequent documents that are supportive in nature that are required to be generated are all outcomes of, I would say, a well-reconciled financial ledger. So once the financial information in your books are reconciled, then whether that's journals, ledgers, whatever documents that are otherwise required to support the compliance are just offshoot derivatives of the final transaction numbers. And I can maybe show you an example once we've provided we have the time, and I hope we can make the time for that. So absolutely yes, you're audit ready if you ensure and if you can just make it a point to reconcile on a timely basis. Because at the end of the day, once you've reconciled, generating these documents and reports are a click of a button. Now, we do have a PDF version of this particular document in our slide share, and we'll maybe make that as a added line item in our YouTube when we have this webinar recorded and available in our YouTube channel. But if you really look at the checklist we spoke about, we've kind of divided them up, if you will, into three major areas. Of course, your invoice balances, the fee structure and handling the retainer, which it begins with to be certain, and then last but not the least, handling the trust and the required documents, right? So it really starts with defining a clear fee structure and the retainer, starting with handling any contingency, block fee, billable fees, etc. in your fee structure, to having a discipline of generating the invoices even. Because if you're not generating invoices in time, those numbers are not going to reflect in your accounting system. Okay? The customer may have paid you $1,000 and it may have already reflected in the bank because they paid you through a credit card and then the credit card company just deposited that into your bank account. But you need to be able to record that payment and give that client that receipt. Unless you do it in the accounting system or find a way to automate that into your accounting system, then the numbers are not going to match. So unless you generate an invoice to begin with, you're not going to be able to free up money in your trust account. So there's many implications of each of that. So having that checklist on a regular basis to be doing all of those steps, working towards that perfect monthly reconciliation or weekly reconciliation is something that every law firm or legal firm should strive for. And we wanted to leave this bit of a food for thought, if you will. So, of course, with the legal accounting or even the accounting world has evolved, as we earlier witnessed, from a double entry system to a single entry to spreadsheet to now that of a legal accounting system. Now the big question here is time. Time is money and time is precious, and time has almost become a differentiator as well in today's day and time. Between you and another legal firm, your responsiveness to a situation has become another differentiating factor, an X factor in the whole relationship. And we talk about this often in our customer and user experience webinars that we conduct. So how can you maximize the time that you have for yourself and your firm to be able to respond back faster and be able to be more reactive to the situation? Okay. So of course you can do this in a very manual process, or you could take the help of today's technologies, because it's a great day and age to be a legal firm, because there's quite a few tools and techniques and software and applications, whatever you want to call them, that are geared towards making your life simpler, faster, and more efficient. That of a legal accounting system is a great investment to make in to help automate, speeding up those processes, and allow you to give that X factor back to your legal firm. Because the legal accounting system, as we discussed, truly was purpose-built for the nature of the business, and it gives you the information and the data and the reports and the checks and balances that accommodates a very compliant life cycle. Okay? And that's all we wanted to leave you with this particular slide. Of course, this is kind of repeating the same thing, but keep in mind the aspects of compliance, accountability, being able to give you the key data, because, you know, as they say, data is key, data is money, and data is wealth. And of course, ease of use, being able to access information at any time, anywhere, through an internet or otherwise. And you can Google this, of course, and you can find these documents, but we found these references and these collaterals to be very meaningful, helpful for you to even understand the whole reconciliation process, what is really expected of the Law Society's audit, and it's really not that of a fear factor of trying to catch you on the wrong foot. It's really giving you the tools and techniques and things to keep in mind so that you're always a couple of steps ahead of time and catching those issues before, they cascade to become a problem. Especially the one on the audit frequently asked question. Of course, these websites have been updated to reflect LSO with the name change. There you have it. So I'm going to request you to start thinking about any questions that you may have with regards to today's webinar and start typing them in your chat window, because we do have a support team that's rarely available to answer those questions. I'm going to quickly shift gear with another 10 minutes remaining, and I'm going to use uLaw as an example, okay? An example of a legal accounting system and the benefits of that. How can you accomplish many of what we spoke today through that of a legal accounting system? And I'm again using uLaw as an example only. This could be any legal accounting system of your choice. We're of course cloud-based, we're Canadian. That kind of gives the nativity of the product. But let me take the first example of what the reconciliation process looks like. Let's take through a simple, I would say, a day-to-day office in a legal firm. I'm going to go ahead and add a client, right? Almost the first step of that of a client intake. And I'm going to say Mr. Jeremy Fitzgerald. Okay. I'm going to say it was a family referral. add the information to make this look meaningful. I'm going to skip the phone number and everything else. I'm just going to go ahead and save this information, okay? For the purposes of today's demo, I'm going to skip the whole conflict check, conflict screening process. Now that I'm going to dive straight into creating a file, and then let's look at what that life cycle evolves into, okay, with regards to trust and otherwise. So by clicking on the Matter button, I'm going to start a new file for Jeremy. And let's leave it at a family law. We could say this is Jeremy. This is Steffi. They post the other party. You can add a description. And we'll create a file number, which is very important, especially for the client's trust listing. Because you could have a single customer, but multiple matters for the same client, and those individual matters may have individual, trust funds that differ. So you may have a family law matter with $1,000 as your outstanding in your trust funds. For this file for Jeremy, you may have another POA matter for Jeremy with an outstanding of $400. So it really comes down to the file and not the client. Now before I go ahead and actually do anything, let me quickly show you where you constantly keep checking about your reconciliation. So in uLaw, we do have a compliance panel where I could take you through a quick trust reconciliation process, right? Where it starts with entering the date when you have to reconcile, entering all of the bank balances, and then of course clearing the transactions. So if I were to look at my situation, my trust account as of today, let us assume the 15th is the bank balance on the 15th. These are all the transactions that I have recorded in the system. I've done a great job because I've kept my reconciliation up to date. So if I were to backtrack to the 31st, you're going to notice that there aren't any transactions that have to be cleared or have to be reconciled. I have a fantastic legal firm that's reconciling in time. So I'm just going to go back to my current date. So as of today, from the 1st of November till the 15th, there are about 6 transactions that have been recorded into my accounting system. Okay? So ideally, if I open my bank statement, let's say this is TD's trust account, if I print out a bank statement today till the 15th, I should see these 6 transactions. I've had 5 withdrawals and 1 deposit. So each transaction, of course, is very self-explanatory in uLaw. It tells you that it was a trust transfer for a disbursement. Even further, it talks about the courier cost, because when you have to recollect what this transaction was about, the more the details, the easier it is to recollect it from your memory. So basically, you withdraw $113 from your trust account for this particular matter because of this particular invoice. And it was a trust transfer, which means the $113 was transferred from the trust account into the general account. And you should see this as a deposit when I show you the general account. Okay? There's another trust transfer, and then on the 11th or the 1st of November, I actually had a deposit. So if you're comparing this with your bank, what you've got to really do is open the bank statement side by side. And you're going to notice here, when I click on this bank date, we allow you to change this date. This is so that you can reflect exactly when this transaction reflected in the bank. Okay, so let's take the example of there's a retainer. Now as soon as you received it on the 1st of November, you may have entered it into the system, and that's why this first date here is the date of the accounting system. Maybe when you deposited on Friday, it did not reflect in your bank, and let's say you open up your TD trust account, it says the 5th. Very important that you now match the date of your accounting system with the date that's actually in the bank. And why this checkpoint is because now you've dealt with this transaction. A, you've agreed that both these transactions exist, both in your accounting system as well as your bank. And B, you've also identified the actual date that was entered into the accounting system and the actual date that it was reflected in the bank. Now, for whatever reason, if the dates are the same, you can leave them the same. You can say, you know what, it was on the very same day of first. Okay? This is what you would do with all the transactions in a particular month. Now, an added feature, of course, in uLaw is you can actually do these transactions on a weekly basis. So you can say, I want to reconcile till the 8th. I can reconcile it up to the 1st. So if I look at 8, I've only had 3 transactions. So if you've caught this last Friday, you have lesser transactions to deal with, and all you can do is quickly open your bank statement, make sure that these dates match, and as on the 8th, let's say the bank's balance was $973. Instead of reconciling it for the entire month, you can do what is called as a preview, which means you've already dealt with these 3 transactions. You don't have to come back to it again. Okay? So if I now go back to my trust reconciliation, and if I show the 15th, now you see that these 3 line items are in blue, indicating to you that you've already dealt with these transactions. You don't have to deal with ensuring what date does it exist or not. You've already done it when it happened. You only have to deal with these remaining 3 transactions that happen later in the month. So this way, if you start to capture the truth of those transactions closer to the date and reconcile, previewing them closer to the date, at the end of the month, you're just going to see a bunch of blue lines. All you got to do is check these boxes and be done with. And here's a preview of those 3 transactions. It's not an actual reconciliation statement, but it's a preview with the same template, giving you cleared and trust listing as of that date. Okay? So another added advantage, if you will, to being able to capture those transactions closer to date. All right, so let's go back to our friend, Mr. Jeremy, and I'm going to go into my trust tab. I'm going to deposit a quick retainer. I'm going to say 1,130. I got a check, and I deposited into my TD trust account. I can give Jeremy a trust receipt. Now you've entered this piece of information into the accounting system. So maybe Jeremy handed over that check to you. You have that check in your hand. Okay? It's still not deposited into the bank, but you entered it into your accounting system. So let me go back now into my accounts compliance and go into my trust reconciliation. And now what do I see here? I see an additional line item reflecting for today with a deposit of 1,130. So that piece of information that you entered in Jeremy's matter of accepting 1,130 oddly got translated as a reconciliation line item, as a transaction in that reconciliation process. Okay? So that's how easy it is for you to now deal with these financial numbers. There's no more the reason for you to fear this reconciliation process. Okay? Now let's go one step further. Let me go ahead, and for the purposes of today's demo, I'm just going to go ahead and add one quick line item. I'm going to say initial meeting, second meeting, third meeting. Done. Do not try this in your firm. It's not going to work. This is just for today. Now this could be a flat rate, or I could make this a billable time, toggle this, and then say it's 2 hours of work. But let me just leave it at flat rate for now, just simpler. I'm going to say $1,000, and I spent 2.5 hours. So at $400, that's perfect. So I'm going to go ahead and click Save. So you see the projected balance is $1,130. The minute I've docketed this, the projected balance is going to drop to 0, but the trust receipt still remains at $1,130. I have still not withdrawn that money from trust, right? You can see that. So the last step in the puzzle is to be able to go and invoice it. Now, unless you invoice it, this is not going to reflect in your reconciliation either. If I go back to my trust reconciliation, you see that money has not been retrieved from, it's not been withdrawn from trust yet. For that, you need to generate the invoice. So let me go ahead and generate that invoice. And again, for purposes of today's time, I'm going to skip the pre-bill. I'm going to just go ahead, skip it, and invoice Mr. Jeremy. We'll just wait for the download. Now, even after you've invoiced and generated the invoice, if I were to go back to my trust reconciliation, it's still not reflected as a withdrawal yet. Okay, you've still not taken that one step that's important to do this trust transfer from trust to general. And only after you do the trust transfer will that transaction reflect in my withdrawal. And where is that? It's right in our matters. So I'm going to hit the question mark here, which pretty much tells me what line item I still have done. So I'm going to click on the pending trust transfer. So let me go ahead and click on that. Pending trust transfer. And you see that says $1,130. As a legal accounting system, we manage, again, the checks and balances so that you do not remove anything more or less. It's exactly the same amount of $1,130. Okay? I'm going to move from my full trust account into my general account. I'll do that as a. Now I've done my trust transfer, okay, from my trust account, and I've moved that money into my general account. I've done the trust transfer necessary. Okay. Now with that, of course, the reconciliation should reflect that 1,130 as a withdrawal as well. Now the same thing applies to my general account. We looked at how the trust reconciliation happened, the 4 data sets that we generated. Let's look at our general reconciliation. Now, of course, if you look at the general reconciliation, you have more pieces of information. You have trust transfer. So that $452, that's the money that's deposited. So I can go ahead and say 300. Clear all these transactions. And again, I've already dealt with 2 of these 5 transactions, and that's why it's in blue. And I can go ahead and if I can generate an actual reconciliation, I can do that, or I can just generate a preview, and you can add all the blue lines together for one final reconciliation at the end of the month. But if you look at the data sets, it's the three components. It is the closing balance per bank statement, any outstanding withdrawals or payments, what's the total balance in the ledgers, all the clear transactions. And you see there's no trust listing required in my general reconciliation. Now, once you've done these two reconciliation statements, generating, and this is what we meant, you're now audit ready. If the auditor were to ask you, all right, show me your November reconciliation followed by your November trust ledger, you can just go ahead and say, fantastic, I'll do that. I already have my reconciliation document for November. Here it is. And then you can actually generate those ledgers and journals on a need basis. So just generate reconciliation documents even at the minimum and keep them ready and generate this document of ledger as and when you need it. And you can see the Jeremy Fitzgerald and the status of that. Okay, so the minute you have your reconciliations done, you're already then ready for all of the audit readiness. So you can see how a legal accounting system kind of walks you through it, through that life cycle. But at the end of the day, no matter what system you use, it is important that you can generate a statement of reconciliation both for trust and general with these important data sets captured. Okay? So with that, of course, I'm going to kind of draw a conclusion to today's webinar. Once again, today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. And it was about trust and general reconciliations demystified. I once again hope that this was a meaningful session for you, and I will wait for any questions that you may have with regards to today's webinar. Thank you. Well, I did not. I'm just going through this process because I did not complete it properly. I just wanted to show you. After the trust transfer was completed, you can see how the 1,130 has been reflected as a withdrawal in my trust account. And if I were to do my general reconciliation, it's going to show as a deposit into my general account. Okay? And basically, you're going to just look at each of these transactions, change the bank date as you see them in your bank. Add the bank balance. And once these two numbers match, you can actually generate an actual reconciliation document as well. So the question is, can I actually have 4 or 5 different reconciliation statements in the same month if I'm doing this on a weekly basis? That is actually a great question. And what we recommend is generating previews so that you actually have these blue lines generated. So every week, imagine there's 3 or 4 blue lines rather than having 20 black lines at the end of the month. So preview them on a weekly basis. Okay? So for example, if I were to preview it, I could do a preview by the day, right? For the 14th, I've got these transactions. The only one that I've not dealt with is this disbursement. So I can go ahead and preview them on a weekly basis. And then at the end of the month, you're pretty much going to have to deal with the last set of black lines for that particular week. Everything else is going to be blue, and you can almost blindfoldedly check them off because it gives you the confidence that you've already dealt with this in the previous week when it occurred. So, good question. You could have 4 different transactions, but I know the auditors sometimes do ask for a single document. So you could generate 3 review previews for the first 3 weeks of the month, and then the 4th week would be the complete reconciliation. Or you can just wait till the end of the month and then generate 1 reconciliation document. You just have to deal with more transactions. Are office expenses reported in the general reconciliation? The answer is yes. So as an example, if I were to add an office expense, and I'm going to say rent for the month of November, $1,000. Let's say it's coming out of my general account. It came out today. When I click on compliance and click on general reconciliation, I'm going to now see that $1,000 show up. Because, we reconcile the entire general account. Here's that general reconciliation as of the 15th of November. Well, of course, you had the $1,000 now. Okay. Hope that answered the question. So the quick answer is yes. If you do have office expenses, they most definitely do show up in the general reconciliation. Of course, the difference is when you look at the description, you're going to notice the definition of whether it was a client-related general transaction or whether that was an office business-related general transaction, right? So that's the big difference. Any more questions? Okay. If there are any more questions, again, thank you so much once again for your time today. Have yourself a fantastic weekend. This webinar is being recorded, will be available to you to review as early as Monday next week, and we look forward to seeing you in our next webinar next Friday. Thank you, everyone. Take it easy.